What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some earnings to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. And yes, I already have the document up today. Well, we have our first 2 weeks of 2023. It is going to be interesting as we had some very good data sets to start out 2023. Uh, we had the core inflation report come out on Wednesday, which we got 6.5. Expectation was 6.7, and previous was 7.1. So it's great to see the continued decline from 9.1 on inflation. We still have to be very, very careful with inflation. This is why the Fed is very careful with inflation, because it could run up very quickly. And we saw how quick it could run up essentially last spring when the war kicked off and how inflation got carried away. But we still have to remember that, all the inflation that really matters is taken out. Food has hit all-time highs. Food prices. You have rental units have still gained. I believe it's like 7%. Energy has somewhat sustained itself, but it is still high in general. So the things that matter are still very expensive. You can't shy away from the fact that credit card growth rates are still out of control, and that a lot of people are in general. Um, Selling off desirables, luxury items that they bought during the pandemic for fractions of what they bought them for, to try to help sustain themselves through this current period of time. Now, um, something that I think is very important to take away from all this doesn't the market is, in my opinion, the market is delusional from what is happening. It is trying to time a pivot when it is very clear that the Fed has said that they're going to, even though they may lay off rates, and I think this is why we're getting this push. We are in earnings mode, so that's something you have to keep in mind. And I always try to highlight that when we are in earnings mode, because the market will pump. And now we're getting some good data sets. Even Golden or JPM reported and Bank of America reported. They did well overall, but forward guidance is very bleak, and the market really doesn't care at this point. The market is running off of hopium. But the problem is yes, core has come down, which is good, I guess. But the underlying truth is something really big and bad is about to break. And something we talk about. I've said that I haven't been focused on inflation because the continued couple of months of gradual decline in inflation was something I was looking at and was happening. So my next thing was, okay, well, what's the next thing to break? And that was the consumer destruction, demand destruction. I don't know why I always flip those two words, but nonetheless, uh, with that being said, we have to see where they're sitting at. They're liquidated. We've seen the liquidations of assets. The next thing will be housing. And the biggest problem is, I think 2023 is going to be the year of bankruptcies. And it's going to be not only people are going bankrupt on their house because they liquidated all their assets and they have nothing left. And you're going to get a lot of corporations that, again, this is why I say if the average person off the street can't tell you what they do, they're more than likely going to go bankrupt this year. There's a lot of strain with these high rates. And just because inflation is coming down, the fast, rapid increase in rates is what is causing this other major catastrophic event to occur. And so, yes, inflation's coming down. There's a lot of whispers of only a 25-point basis move on February the 1st. There's talks of it. We're not really sure if that's going to happen. More than likely, it might be still a 50-point basis move, but we'll have to see. The market has been very good about pushing hopium with, decline of 50-point basis moves, then when you got another 75 and absolutely wreck the market. And that's what something you have to be careful of. These pumps, you really have to be careful of. You have to be taking profits, in my opinion. Unless you're a long-term investor, then that's just a different scenario for you. But understand that you invested for a 5-year term, and understand that there's the volatility just isn't going to go away. We aren't just going to bottle rocket out of where we're at and continue to all-time highs. Um, Again, there's always possibilities of things, but the chances, in my opinion, from seeing the markets for so long, I don't see us going back to all-time highs anytime soon. I It's not saying we can't make 100, 200, 300 point run on the general index. That's a possibility, but and it's always a possibility. Just like it could 1, 2, 300 points down just as quick. So you have to be adjustable, and that's kind of what we're playing. And this is why it may seem like I'm going back and forth, but because the past year into this year, we play ranges, play 100-point ranges, and that's pretty much how we've been playing it. And so to take advantage of this market that we're currently in, because we're not in a normal cycle, I do reference a lot of normal cycle occurrences or events that typically happen, especially when I talk about earnings modes and stuff like that, because you have to have something to base off of this historical time that we're going through off of. And so, being said, we're still battering 4K, the 4K mark, technical wise on the SPX. If we cannot break that, come on Tuesday, it's going to be a problem. And then well, we're gonna have to see. We got some big earnings. Big earnings week is starting to roll out. So let's kind of go over this, what we got going on during this week. So market will be closed on Monday for holiday, but on Wednesday we got some big earnings. We got big earnings weeks. We're gonna start getting some big earnings. We got a couple banks, like I mentioned on Friday, at JPM and Bank of America. Again, they have done well, but their forward guidance is really bleak. And the last time we had a warning shot with FedEx, no one wanted to believe it, and the market still pumped, and then we absolutely got obliterated shortly after. And that's kind of what we're seeing, is this delayed reaction. Everything's going to be great. Everything's going to be great. And then you're going to get that news, and then the market's going to crash. This is what I'm saying. I'm not saying don't take advantage of the pumps, but you have to be prepared that when if it dies off, you don't be surprised. You have to be adjustable. You can't be so one-sided that you can't see that, oh, we're just absolute bottom. You don't know that. The market can go to zero, right? Just like it can go back to all-time highs, it can go to zero just as quick. So you have to be adjustable on what is currently going on. So markets close Monday. Wednesday, we got our core PPE. Again, PPE isn't a huge one for me. Typically, as far as like the effect it has on the market, but it is very critical to be watching this, because just the food prices in general are just absolutely crazy. And the way things are going, we need to just keep track of that, because that's going to have a major effect on the consumer at this point. Beige book coming out is going to be important, because we came in. We're coming into another very historical time in which we're going to have to figure out, are we coming in a 25-point basis move, or are we coming in a 50-point basis move? So that will give some insight on Wednesday, and that's at 2 p.m. Eastern Standard Times. Again, all times I show on here, Eastern Standard Time. So the beige book will be important going into Wednesday, just because it's going to be, again, another very pivotal points, because this thing that people are feeling are really close to a pivot. And if we come in at a 25-point basis moves, that means it's still the next one that they're just not going to raise rates. They have to understand that the Fed still want us over 5. There's a couple of Fed members that still want us over 5%, and we aren't even close to that yet. So we're going to have to see upcoming events. Again, monetary policy, it's good to keep an eye on these events. These are actually going to be very pivotal, at least for the next year, until inflation gets back down to normal levels, roughly around 2%. They're kind of projecting a 2%. I believe it's July of next year, which is going to be very hard. You can't just project that, because inflation doesn't just go straight down or straight up. So there could be a pivot at any point when we start ripping back up. So you have to be mindful of that. You have to be adjustable for that. That stuff is not priced in. if all of a sudden we got a report that flips the other way, the market's going to react dramatically to that, because that wasn't expected. People just expect stuff to go straight up and expect stuff to go straight down. That's not the way it works. So we will have to see what happens. But nonetheless, upcoming earnings. Tuesday, we have more banks opening up the short week that we have. We got Goldman Sachs and Morgan Stanley. And then on Thursday, we got our first big tech in Netflix. Again, I'm not a huge Netflix fan. I don't really like playing it. But nonetheless, it's going to have earnings. That's going to give us our first taste. Kind of a weird schedule we have this year. Normally, on a regular cycle, you have all banks in 1 week, and then you typically have some one-offs, and then Netflix or Tesla, and then you get the big tech earnings. But now they spread it out very tactfully, in my opinion, so that way that we only get a taste of big tech, we only get a taste of the banks, just to make sure that things roll off okay. So that's kind of what it looks like they're doing this year with the schedule. Nonetheless, this is something that's also interesting, because I do this every week. If you don't know, these are essentially the options that are how they're priced for the week. And if you watch this every week, you'll notice the numbers going around. It's good to watch these numbers, because you don't only want to know, okay, well, how big is the stock going to move, or index going to move throughout the week, but you get an understanding of what the average move is. And then if there's a big move in, because at certain times, if you play options, you don't want to be playing options when SPX is at 130 priced in, because you're just not going to make money off options. So the options have come way down this week, what I thought was really interesting, considering we're rolling into earnings. Now, there really isn't a lot of big events this week, so that could be why. We do have a lot of Fed members talking on Wednesday, so do keep that in mind. But nonetheless, there is... we were up a little bit last week because of the events with Core. Now this week we've come back down. SPX is sitting at about average right now. SPX is roughly around average. So that means if we have some really bad earnings, this is why I think they spread the schedule out the way they did, because we have bank earnings to start the week off. We kind of got a taste. Well, the banks seem to be okay. Forward guidance is kind of crappy, but let's see what Tuesday brings. And so Tuesday we're going to open up with some more banks. If that's bad, we'll see how much of an impact it has, but we'll have to see. And then all the rest of the stocks have come down quite a bit, so we're going to have to see. Again, if there's anything that's off this week, it's going to hold a lot more weight when it comes to earnings. So just be mindful of that. So that's pretty much what I got for this. Technical wise, again, very parabolic. I talk about this all the time. If you think this is just going to parabolically rip to all-time highs, you got to be careful. We have already made... This is where FOMO comes in, because people think, oh, we're reversing. But you look here, right? This is a 200-point move already. And we haven't corrected, and we haven't really touched back or anything. 200-point move. The market just isn't going to go straight up. It can go up maybe another 100, which would put it here, which we've been rejected roughly around the 4,100. Again, we've been playing 100-point ranges typically, because we played this 100-point range. We bounced around quite a bit, and then we finally broke out into now this 100-point range. We are coming into this huge wedge. Again, this trend line here... trend line here on the daily is very strong. It's been holding us down all last year. So to break that, you need some really positive news. And again, the core inflation report wasn't fantastic. Yes, it's still coming down, but we still know food is extremely high, making all-time highs, and we have essentially rental units are still very high. Hopium is strong, and you can get some big moves, and we've seen that. That's a 200-point move. That's a big move for Hopium. That's a Hopium move. But is that Hopium going to be enough to break us out is the question. And so coming in on Tuesday, if we can't open above the 4K mark, it's going to be a problem. And again, you want to look, something I talk about is, these wedge as downward channels. Every time we break out of them, it's only a matter of time You gotta love the chart sometimes on TOS. Is just fantastic. But nonetheless, if we do break out sometimes, more than likely we fall right back into that channel. It's happened all last year. If you were in the market at all last year, you saw it multiple times. You get a breakout, people get super excited that this is going back to all-time highs, and then it breaks back down on the channel. So the 4K mark is going to be extremely important coming in on Tuesday. And if it does break out, which, I mean, at this point, I think people are just tired, and so I can see that. But ultimately, the 4K mark, it needs to. In all honesty, there isn't a big enough event. You can't go off of technicals. This is something I talk about all the time. Do not go off of technicals. Technicals aren't 100%, right? Technicals are more so like 40, 50% of the time, right? And this is why I use supply demand. This is why I talk about price action of the candles. They tell you more. Patterns don't work. They just don't work. And again, the very slim chances that they do work. And then you have to understand that all the algorithms, they're programmed to recognize these things, and algorithms are based off of events. And so if there's specific events that are caught in headline news, that moves markets. So you have to be aware of what the algorithm is doing in the background and understand how the market really moves. But with that being said, we have to break this 4K mark. If we can't break the 4K mark, we're going to be in trouble, and we're going to come back down. We're not going to make new lows, in my opinion. Again, depending if we just naturally break this back down, could be headed back down to that 3,800. Again, that's our floor. Could be a higher low if we can't break this, which would be a cause of concern going into monetary policy. We're going to have to see. We could just essentially chop around here, to be honest. This 100-point range here from the 3,900 or the 4K mark to the 3,900, and just continue to chop. Like I said, we played a 100-point range for almost a month here. And I've talked about this when we broke into this range. Maybe we're just going to play this 100-point range until we get monetary policy, and then potentially break out. Because if we have good earnings, could potentially break us out. That's what I talk about good earnings. Even if, because we've seen this was the thing on Friday. JPM gave us a very bleak forward guidance. Okay, that's great, but we're seeing how the market digests that. The market really doesn't care about forward guidance. It did matter last year and the year before that. I guess people were concerned, but now people are like, yeah, we know things are going to get bad, but it could be the change. It could be the flip. This is what people are betting on essentially right now, is that the Fed will come in at 25-point basis move, and then the next rate increase, there won't be any rate increase. They'll just stop increasing rates, and then the Powell will magically wake up and say, we're going to bring rates way back down to 2%, whatever the case is. And that's just not going to happen. Once they get to where they feel that they're comfortable, that they have a grasp on inflation, they're going to hold it there. And they kept saying multiple times, it's going to be there for a long time. It's going to be there for a long time. And you have to understand that what these high rates are doing are crushing the economy. If you're not seeing that with the massive layoffs and in the credit card debt, and the food going out of control, and the rental units going out of control, hopium isn't going to only last so far, as you're having this pressure cooker continue to destroy the consumer. Hopium will only get you so far, but you have to understand what's really going on beyond everything else that's currently being said and told out there. So again, 4K is extremely important this week. If we do break out, again, it's the next 100-point range. Again, I don't see us ripping back to all-time highs. There's no positive news to rip us back to all-time highs, because God forbid you want to start ripping up, which is a possibility. And we saw during the pandemic, I believe the pandemic came out, and the market started freaking out, and we sold off for 2-3 months. And then we had this huge rip. I think it was in, I can't remember when it was. I want to say it was around springtime at some point. It was a huge 500-600 point rip, I think. And then all of a sudden, no, the pandemic isn't over, and then we sold off, and then that was the big move. That's when we start limiting down like every other day. That's what I think we're getting ready to watch. So you have to be very careful on what this move is, because you're going to have FOMO. You're going to have all these people, oh man, I didn't buy the bottom. Hurry, quick, get in. And then all of a sudden, it just panic sell and then limit down, right? That's the one thing you want to avoid. It's not something that's going to happen. I don't think we have a big enough catalyst for that to happen. It's not saying it can't yet. I know there's, again, I talk about um, essentially this catalyst brewing, but if it gains steam, bankruptcies and everything else, that's going to draw some fear. And again, the overall masses still believes things are okay because gas is coming down. The market's going up. The market's been going up for, it's gone up 200 points. Well, the market's gone up quite a few. The market had a huge rip here. And you want to talk about hopium? This was, people hated this hopium rip. That was almost a 600 point move. And look what we did. From that point, we went from a 600 point move to a 830 point loss. So you have to keep that in mind. So don't just think these hopium pushes can't happen, because they sure can happen. Because then the market will just take all that plus a couple extra 100 points on top of it. So again, we'll see. Again, these aren't really hard ceilings. Again, I think we could still push up to the 4,100, strong possibility. But there isn't. There's a big enough catalyst. People are still concerned of what could potentially happen, and if you're not concerned about it, you need to be very well aware that it's going to happen. Right? The Fed still haven't made their move. The whole market is based off the Fed, and they've been pretty transparent about what they're going to do. And if they come in and, oh, it's a 25 point basis move, great, yay, and then the hopium, parade dies, and this thing sinks 800 points. That's a problem. So, nonetheless, I think I'm done with that, beating that one. But again, you have to understand, coming from my perspective too, I'm very much a perma bull. I very much believe in rally and all that, but just now is not the time to try to time that. You have to wait for the bigger catalyst to play out. Once that plays out, then you'll have a pivot after that. When that catalyst plays out, when you get that other 800 point drop, then, in my opinion, that's when you would buy, because it's played out. This pressure cooker hasn't, it hasn't popped, right? The bankruptcies haven't come flooding in yet. When they come in that is when, in my opinion, the bottom, whatever that's going to looks like it happens. And so again, some of these things you have to let play out, and people are too eager to jump onto it's pivoting now. We've ran up 200 points. Well, we've run up 600 points and dropped 800 points. So essentially, what's your point, right? This is the way the market works. You can't take these little hopium spikes and think that that's a reverse. And again, when everything's just bad, you're going to take the 200 points and say that's the reversal. So nonetheless, now that I'm done with that, take a look at Bitcoin. Bitcoin had a massive rip. Again, you still need Bitcoin to break. You got different levels here, right? You need us to break over 21K. You need us to break over 24K. Again, I just don't see that happening. Again, it hasn't even attempted to hit this 200 in a long time. Last time we hit it, we sold off pretty heavy. And again, something I've always talked about, higher time frames. The first time you're going to hit this 200, it's going to be a hard rejection. So you may get a nice pump up to 24K. It's going to get a hard rejection off that, in my opinion. We're going to have to see. Now, the dollar would suggest that we're going to have a pretty nice bull. Well, I take that back. We could potentially have a pretty nice bull run here. Problem is that it wicked. You need this clean break out of 2. If you can get a clean break, you can get a nice pump, in my opinion, for the bulls. Let's mark some levels here on the dollar. All right, you could even go down to the 101. You got 101 support, and then you got a pretty big jump here down to 99, or to essentially 97. So this is definitely good for the bulls, in all honesty. But we have to see there is support here too, around the 101. So you're not getting a clean break here. Sometimes you have like these, almost like these bigger back-to-back zones here. This one's pretty tight, pretty close. But if it does break out here, again, you're going to get a nice push. You have to be mindful of that, and that a natural push back to the 20 EMA here, which is at the 103. So you could be seeing some sort of hold and a pushback here for the dollar. But nonetheless, bulls, you want this to sell off, and bears, you want this pushing back up. So we'll see. And we don't have a big enough catalyst for either. And so by design, and we're in earnings mode, we will push up. Hopium, and you do have hopium with the fact that the Fed might come in at 25-point basis move. So next one, let's take a look at Tesla. Lovely Tesla is just continuing. Again, it hasn't really attempted to hit this 128 yet. It's attempted a couple different times. It's come close, but it's that 20 EMA. You're going to get a hard rejection off that. Again, this gap here is something I talk about, and this is what I play a lot and works extremely well. So first time retracements back into a 20 EMA that hasn't touched. And the bigger and longer this gap is, the harder the rejection is going to be when it does touch this. And so I look for these all the time. Again, first attempts right after a huge sell-off, you're going to get consolidation and everything. You need the EMA to catch up. And then when it does catch up, you'll get that retest. And normally you get a hard rejection off that. And so I'm kind of watching that on Tesla. And that's roughly sitting around the 128. We had some nice pumps that almost touched it this past week. There's been some pushes there, but we'll have to see. Again, the consolidation here essentially, again, pretty big range for Tesla, going from that 103 roughly to that one. What do we hit? Like, well, I think 126 was the highest here. Yeah, you're playing that range essentially at a 26-point range on Tesla. Again, Tesla, that's another big thing this past week too, is they are reducing the price of their car. So if you think that that's okay, and then we're not headed in a recession, and again, you have to understand that a lot of the stuff and the propaganda that's pushed out there, you have to keep hopium alive, or else you're going to crush spirits and everything else. I'm trying to take emotion out of it and look at it objectively so that it could take advantage of the market. Because of the fact that it's not better. Things are really bad unless food changes and rentals change. People just aren't going to make it. You continue to liquidate. My problem is the fact that they are prolonging the rates at a high rate, and at that point, that's going to cause something to buckle. That's the problem. Now, if they did stop increasing rates and they did stop and they started reducing rates, then that would be a different question. Then I could say, okay, now we have a pivot here. It's not saying that, okay, the market may be taking a pivot as in, okay, well, rates stopped increasing. That's a pivot. And I can see the market making a pivot move. And something I talked about there for a little while was that once we start increasing rates, I did see a rally coming. How strong of a rally, it's not really sure. But then once the market realizes that they aren't coming down on rates, that is going to be the problem. That's why I've shifted my focus off of inflation till when the rates are going to actually start being reduced. And you had multiple Fed speaking this past week saying it's going to be a long time. And it's funny because they kept saying the same thing. It didn't matter who you asked. They always said it's going to be a long time. So nonetheless, Apple is showing some strength. Again, needs to break over the 135. Okay, we got earnings mode. I believe they're first week of February. I got a lot of them that are first week of February. So we might get a nice, again, earnings mode could get a nice breakout here, especially if nothing like horror, because there's no real big events this week. It might be a really solid week to the upside. But again, in general, you need need that technical level to be broken, that 4K mark. Again, it's been a very, I know I don't really talk about technical levels, but this particular technical level, when you have this much um, resistance and it's been holding down the market, this trend line has been holding down the market for a year, it matters. And so you need to break above that. The question uh, is what we are, the current information in the hopium enough to break us through is the question. So we have to see on Apple here and see how this does play out tomorrow, um, or on Tuesday, excuse me. And so BA is the next one. BA again, very strong push on value, very overextended. You know, you don't want these parabolic moves. We saw what these parabolic moves did 2 years ago. The fact that everybody's foaming into BA because all tech is just getting absolutely obliterated. You're getting this push, but once that sell pressure comes in, it's going to take this thing down quickly. And again, a 50% move on this alone is back down to 175. So you got a huge drop from where it's currently sitting at. So we'll see how that does play out. JPM, again, forward guidance killed it and dropped it all the way down back here to the 135.66, and then big rip back up. So this is already telling us now that people don't care about forward guidance. Yes, it might drop the market a little bit, but they still had good earnings. So they pumped us back up for now. So that's, again, still concerning, is you're getting warning shots. And we know what happens in the market with warning shots. The market isn't going to pick up on warning shots. The market doesn't care. The market is in this euphoric state, and it's going to rip. That's what, and play with it. I'm not saying don't play with it, but you have to be mindful. Don't think this is going to be the reverse, because you're already getting your warning shots. You have multiple warning shots, and they continue to be throwing out there each and every week. Just be mindful of that. That's why I say risk management is huge. Golden Sachs, same thing, big rip. We'll see on Monday. Again, unless something really crazy comes, we're noticing that forward guidance really doesn't have weight. In particular, value stocks and stuff like that, you really want to watch their forward guidance. Obviously, that's where the safe havens are. Big tech is not carrying as much weight as it did because it's just been absolutely wrecked for the past year. So it really doesn't matter what they say, because the market really doesn't care, because the people are making money off of big tech right now, so they don't care. So you have to keep that in mind. So Golden Sachs, we'll see what they do here, trying to push back up. Bank of America, same thing, sold off heavy and it's pushing back up. Again, needs to break back over the 35 for this thing to be any good, or it's not going to be doing much of anything at all. And same thing here with Golden Sachs. It needs to break back over the 375 and then break the 387. Could be a higher low here, a retest and a push up. Again, we have to see how that does play out. But that's pretty much what I got. This video is long. I ranted a lot. There's some really key takeaways for this past week and kind of what I'm looking for. I think, again, in the short term, we could get a very strong rally. As long as we can open up Tuesday above that 4K mark, I think we could get a very strong rally. And my belief in that rally is not, we just have to be mindful. We haven't pivoted yet. We've gone up 600 points and gone down 800 points. So just be mindful of that. And then we take it from there until that event happens. I am not permable again. I am short term. Okay, take advantage of the rally. Get ready for the drop. Is this the drop that exposes essentially what is happening from these rate increases? And if I find that what is happening, the move that is happening to the downside is from the rate increases, whether that's bankruptcies or whatever the case is, then I will be prepared to go all in for an upside rally in perma bull style. Again, this thing is not fast and it is very painful to watch. This up and down, up and down. I believe it. I get it. I'm annoyed too, but this is what's going on. You have to be patient for it to unfold. Because there is a lot of truth to food prices being at the prices they're at, and rental units being at the prices they're at. Energy has come down, but still high. So No, things are not better. Yes, the Fed will continue to hold rates for a long period of time. So that being said, again, a great time to take advantage of it. Take advantage of it when you can. Take advantage of the pumps and sell them. Again, not financial advice, but anyway, let's go out there and have at it. So have a great week, guys, and I'll see you in the daily updates.